All right, should be up and running. Everything looking good on my end. Let's go ahead and get this stream started. All right, great. Welcome back to the channel, Crypto Trend Trader, with our Sunday evening market look ahead. It is 8 p.m. Eastern Standard Time on August 15th, 2021. Before we get started, I'd like to remind you this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. All right, so we're going to run down our typical assets as always. Let's jump over here and get started with the 10-year Treasury Yields. So this is our TNX chart. As we have seen, we basically were in a downtrend for some time, entered into a short-term uptrend, ran into some resistance, and now here we are retesting key levels at the 200 exponential and simple moving average. We were able to bounce back on top of them temporarily, and then we got a fairly violent sell-off to end the week on Friday there. And when we came down, we found some temporary support on the 200 simple moving average, but we are very close to losing these levels. We are inside the bullish control zone, and we do have a blue flip on the slope line for the TJD TDMACD. And obviously, this is a decision point right here. So it could honestly go either way at this point in time, in my opinion. I can make arguments for either one. But if we zoom out and look at the bigger picture here on the weekly, once again, long-term downtrend, nice uptrend. We ran into the 200 simple moving, exponential moving average, tried to chew through it, got rejected, and then eventually sold off to try to regain some steam. We're now back down inside of the bearish control zone. We are all red histograms and below our slope line. While it's still blue, we have crossed below zero line, and this is a pretty strong weekly rejection candle off of the 821, which have now flipped over to red and pink. So at my point, in my opinion, this looks like it's going to, after that rejection, after everything right now, looks like we're going back into at least a short-term pullback. So I'm expecting these yields to get down to like 1% roughly. And then here on the monthly, again, we got rejected pretty powerfully back at the end of 2019 off of the 200 exponential and simple. Came down to essentially 0.4. Got the move back up, right about to cross the 821 back to the upside. We successfully crossed them, and now we sold down below them, try to push back up. We still have like 16 days to decide. But if we don't get back above 1.337, that's pretty elite, actually. I did not realize that. But yeah, if we don't get back above 1.337, this is basically going to look like a failed cross or a rejection. And I expect this to come back down and retest the lows. As of right now, though, it is possible that, either way is possible, honestly. But if we look at the actual oscillators and look at where our momentum's at, we have a bunch of green histograms in a row. We're back on top of the slope line. The slope line is still red. We're at the 0 point, but if we just hang out on top of here long enough, it's going to flip over to blue. We also left the bearish control zone, got the hard buy signal at the bottom, and then we essentially are like at the bullish control zone. So while we may be running into resistance, like similar to a situation like this, I expect we'll just come back down, kind of go sideways for a little bit, and then push up one more time. I do not expect us to go to like some ridiculous levels, though. I think, up here at like 2 to 3 is like by far the maximum these could ever go, and I don't think the Fed's funds rate will be anywhere near that anytime in even the remotely near future, as essentially like fundamentally it would crash the entire system. So yeah, that's pretty much it. So I would say daily, monthly could go either way, but looks bullish to me. Weekly looks bearish to me. And then if we just go to the daily, again, daily could go either way, but I have to favor it to the bullish. And then TLT is just going to be the opposite. So 20-year Treasury, basically lost the slope line. We're down here, basically crossed above the 200 exponential and simple, came down, tried to find some support, But we lost the slope on the TJD, TDMACD. We're selling off, angled at a powerful move. This looks to me like a reaction rally off of the 200 exponential and simple. But if we reclaim these areas and curve the slope back to the upside, I don't see any reason we can't get it back up easily to like that 155 level and touch at 0.5. Also, if we switch over to the weekly here, inside the bullish control zone, starting to lose that area, but finding some temporary support. All green histograms above the slope line while it is still red. Now the weekly looks like it could easily find continuation to the upside. And you'll see here that we have basically, a nice bullish looking candle there on the weekly, telling us that, we could easily continue back to the upside. And then on the monthly, looks like it could easily save this area and continue. If it just hangs out above basically 147 long enough, it's going to cross these back to the upside. But we are below the slope line. We're below the zero line. And the slope looks like it's getting ready to flip back over red anytime now. We're very close to entering into the bearish control zone. So again, looks like a reaction rally off of our neckline. And so, again, it's just opposite of the yield, and the bonds and the yields are just opposite, obviously. We're just looking at the different 10 and 20 just because I like to keep the perspective in mind for like short and long term. There's one thing I did want to talk about briefly, though, that I have not heard people discussing is there's actually like 3 different steps. People are talking about like tapering and people are talking about raising rates. But there's actually like 3 steps. You hear people talking about all of them as if they're one thing, or sometimes you'll hear people talking about those 2, and every once in a while you'll hear people talking about the 3rd thing, but you almost never hear people talking about them as like the 3 different levels. People are acting like it's like an on-off switch. It's not. It's the 3 different levels are all equally important in my opinion, but the first 2 are much more realistic, as where the 3rd one is almost an impossibility. The first one being tapering. They're going to taper their purchases, which means they're going to continue to purchase. They're just going to purchase at a slower pace. They're going to purchase less each month, but still be purchasing. The second is the balance sheet. So they're going to, decrease their balance sheet. That's a separate one. Tapering means they're going to buy less bonds and less mortgage-backed securities. That's tapering. Reducing the balance sheet means they're going to start actually selling the ones they've already purchased. And then the 3rd step is raising the Fed funds rate. So those are 3 equally important steps, but realistically raising the Fed funds rate is exponentially more like threatening to the markets, in my opinion. So if we just, let's look at the TLT real quick here. This was basically when, we were going through the roof here, and then the Fed started buying. Bond prices were going through the roof, and the Fed was buying bonds all through this area. And what's been happening? The bond prices have still been dropping drastically while the Fed has been purchasing, 80 billion per month plus another 40 billion in mortgage-backed securities. So this is all happening when that was taking place. So it's all still happening. They're still buying 80 billion or more in bonds right now. Why are we now seeing a bounce? Well, the market is also buying bonds now. So the Fed took over and stepped in and said, we're buying bonds now. And we still have been selling off violently. And then here, something changed with the market sentiment, where all of a sudden the market wants these bonds as well. So anything the Fed does that will decrease their purchases, or that's like notch 1, is the Fed buys less bonds. So if the market's buying the same amount of bonds and the Fed's buying less bonds, the price of the bonds is going to go back down. If the market starts buying more bonds and it counteracts the less bonds that the Fed's buying, the price will stay the same. If the market starts buying more bonds and the Fed's not buying more bonds or buying less bonds, but the market's buying more, bond prices will continue up. So that's notch 1 of our, elevation. If this is all while the Feds were buying bonds, and then here the market started buying bonds, and then the Fed starts not only, tapers their purchases or stops their purchases, but starts selling bonds also, that's a double pressure. Because now the Fed's not buying bonds, which makes bond prices go down, plus they're also selling bonds, which makes bond prices go down. So the market has to absorb the not buying of the Fed plus the selling of the Fed. So that's 2 full factors of negative pressure on bonds, or positive, correlation to rates. And then the third is if the Fed starts to actually raise the Fed funds rate, which is, essentially the interest rate that they loan money at, or the interest rate that they like guarantee. So typically that rate will have a direct relation with, your actual bond yields. So that's like a third level of downward pressure on bond prices, because obviously there's an inverse correlation between bond prices and interest rates. So if the Fed were to tomorrow stop buying bonds or slow buying bonds, let's say stop buying bonds completely, bond prices would probably start to crash. If the Fed on top of that was to start selling bonds, bond prices would crash even faster. And then if the Fed was to all of a sudden say, and on top of that, we're going to raise the Fed funds rate, that would be three factors of massively downward pressure on bonds, and would cause all three of those things together would each lead to an increase in yields. So the truth is, when are they going to raise rates? Probably never. I mean, like years from now. They're not going to raise rates for years, in my opinion. When are they going to start tapering? Probably beginning of 2022. When are they going to start reducing their balance sheet? Well, in order to reduce their balance sheet, they're not going to continue to buy bonds and mortgage-backed securities while also selling them. So that's like the three steps. So in order to first, they have to taper completely, which they're going to taper like 10 billion per month. So instead of buying, let's say, 80 billion in treasuries and 40 billion in mortgage-backed securities, they're just going to start buying 70 billion in treasuries and 35 billion in mortgage-backed securities. And then a couple months later, they're going to go down to 60 and 30 and then 50 and 25. And so how long is that going to take? That's going to take all of 2022. And then what? In 2023, they're going to start reducing their balance sheet. So they're no longer going to be buying any mortgage-backed securities, any bonds. And then on top of that, they're going to start selling, a couple here, a couple there. I mean, this is like going to be a 5, 10, 20-year process. I mean, how long is it going to take? I think they have like $8 billion on their balance sheet right now, or trillion, I'm sorry. So how long is it going to take them to like taper their balance sheet? Like how long is it going to take them to reduce their balance sheet after the tapering is gone before they even get to like raise rates? And then on top of that, when you look at how unsustainable our debt is at this point in time, the United States has like 30 billion, no, oh my gosh, these numbers, $30 trillion in debt right now. So if rates go back to 5%, what's 5% of $30 trillion? It's $1.5 trillion in interest per year. Just the interest. That's like making the minimum payment on your credit card for a country. So, I mean, the first 1.5 trillion of GDP every year is just going to get sucked up into paying the interest. And then after that, the next, however many trillion is going to go into like production and productivity and growing the actual economy. Well, I mean, what's the GDP of the United States? Like, what's it going to be then? Is it going to be 3 trillion? So half the GDP is going to go towards interest? I mean, and then on top of that, you're not even taking into account like all the, like unfunded liabilities, like Medicare, Medicaid, pensions. I mean, you're talking about probably close to $140 trillion worth of unfunded liabilities. So now we're talking about a really unsustainable amount. So if you have 140 trillion and you're going to have 5% interest on that, plus your other 30 trillion in debt, so now you have 170 trillion and you're going to have a 5% interest rate on the 170 trillion. So you have what? I mean, $8 trillion. It's like double the GDP. So, I mean, it's not possible to raise rates. They cannot raise rates. There will be no raise of the rates. It's official. It makes no sense. It's literally not possible. So we basically have at this point in time 2 different possibilities. One is we go into full banana republic and try to inflate away our debt, or something changes in the actual system. So which one's going to happen? I don't know, but it's going to be hard to maintain confidence from the world if, we full on just say, hey, we're just going to inflate away our debt. So anyway, let's keep moving on here. DXY is next. So DXY definitely just at an inflection point here. We're in a very powerful trend to the downside. We have basically bounced, back up to the upside, put in what amounts to potentially a double bottom here. We are now officially on top of our slope line. The 200 exponential is sloped to the upside. 200 simple is basically flat. You see it like sloped up for a second here, and then with that little sell-off, kind of went neutral again. So it's, at that point in time where it's getting ready to roll over. So if we maintain price action anywhere above 92 or 91.3, that is going to imply that this will flip back to the upside, and then we'll have everything pointing us to the upside. So the DXY looks to me like it's strengthening on the daily. So I would say definitely bullish on the daily. If we switch over to the weekly now, we're seeing the beginning signs of bullishness on the weekly. While we are below the 200 exponential and simple, and they are sloped to the downside currently, that's going to be some serious overhead pressure. Outside of the pattern, obviously, which we already discussed, we do have the 821 cross to the upside. We're still on top of both, so that's bullish. And then we have left the bearish control zone. We've gotten the hard buy signal, and we have entered into the bullish control zone. So again, that's bullish. Stochs are still angled to the upside. Everything bullish on the weekly there. And then, of course, we have a series of higher lows on the TJD TDMACD, which gives us that bullish divergence. Got the move to the upside. The slope is now officially slanted to the upside and blue. And we're seeing many more green histograms than red. So again, we're seeing extreme bullishness on the weekly. And then if we switch over to the monthly, here on the monthly, we have officially exited the bearish control zone. We have a hard buy signal on the monthly. The Stochs are angled to the upside. We have multiple green histograms in a row. So that's our first sign from the TJD TDMACD. We are still below the zero line. We are still below the slope line, but we are looking positive. And then here, if we look at our monthly moving averages, the 200 exponential is angled to the upside. The 200 simple is angled to the upside. We are above the 8 moving average, but we are below the 21 moving average. So at some point in time, when we do break through this neckline, which is that 21 moving average at 93.2, we're basically going to cross the 8 and 21 back to the upside, be on top of the 200 exponential and on top of the 200 simple, both with positive slope lines. And that is going to be, with the exception of this little bit right here, where we had both these are green. 200 simple has a positive slope and 200 exponential has a positive slope. It has never happened before, as long as this chart goes back, which is back to the 1980s. So part of the reason being because the 200 exponential and simple were not populated yet. There was probably a short period of time somewhere around here where that was actually the case. But you see what happened during that period of time. We had a parabolic move to the upside on the dollar. So again, that is what I'm expecting. So. All right, so that is our DXY. So let's actually start with, let's do our indexes, and then I'm going to do like our tech and friends, just because I cut it short last time and didn't do them. But first we have the VIX. VIX is still just kind of moving down in this channel, getting down towards important levels, but nothing too crazy yet. This is like our February 2020 level before we burst to the upside. That's where we're at now. We're basically at the lows, at the bottom of the channel. So is it possible we start to see some volatility come back into the markets? Definitely, but we still have a little potential area to run to the downside. But I would expect it to pick up sometime in the near future. Dow Jones on the daily, still extremely bullish. We are at extremely high elevated levels, but there is nothing telling me this cannot continue to the upside. The only thing that I'm paying attention to right now that's extremely important is we did hit the 1.382 Fibonacci extension perfectly, and that is the extension from our previous high back here before the capitulation in February 2020 to the low down here in March of 2020. So from that high to that low, the 1.382 Fibonacci extension is where we tagged right here. And when we tagged the 1.236, we did see a decent little pullback off that level to regain strength. So what can we expect? I mean, what, like a 3% pullback or something? yeah, 3.3% pullback. So, I'm not by any means calling for like capitulation in the markets or anything like that. At this point in time, it would not be unrealistic to think we come back down here and like retest this breakout level, at like 34,783, somewhere around there. But again, I'm not seeing anything that tells me this is just going to start selling off violently. S&P, new all-time highs. We are very much squeezed into our little wedge right here, and eventually going to see a break in one direction or the other, either to, extreme highs or lows. We are already at extremely elevated levels. So in all reality, what do I think would be more likely to happen? Well, it's going to be very tough for us to just burst to the upside right now since we're already at such elevated levels. I think it'd be more realistic. We see like a little, spring action right here where we like break to the downside, cool off our indicator oscillators a little bit, and then it's a fake out and we shoot to the upside. But again, I'm not going to get bearish on these markets as there's no reason to. All they're doing is just making new all-time highs after new all-time highs. IXIC, NASDAQ, getting the hard sell signal in the bearish control zone or bullish control zone, just creeping up along this slope line. Again, still expecting the measure move to play out regardless of what happens. If rates suddenly rise, the NASDAQ's going to fall under pressure, obviously, because the evaluations are so high. But in all reality, if what I think is going to happen plays out and rates drop down to closer to like 1% or even slightly less on the 10-year Treasury, I think more realistic than not, we'll hit our measure move target of the ascending triangle, and NASDAQ will be up here hitting 15,700 before long. So that is still our target. The Russell is basically, I'm not sure what happened to my actual drawing tools on this one. I might have accidentally deleted this chart. Some of the charts were just getting a little bit, a little dirty. Depending on how you want to look at this, I mean, we basically have just been operating inside of this range. So, however you want to look at this, whether you want to go by our actual closes down here and closes on the top to capture like the majority of the move. I mean, what have we really been doing? We've just basically been going sideways since, we entered into this range in like February. The center of the range was hit for the first time like mid-February. So, since then, range trading, we're below the heart line at this point in time. I'm not bullish at all on the Russell. I think more than likely, what's it going to do? It's probably just going to trade inside this range for a long, long time. The fact that it moved all the way up from the bottom to only the heart line, but moved from the bottom of the indicator range to the top of the range means that now I think, it's more likely to come back down and test the 200 exponential and simple. But the Russell looks terrible, which makes sense because it's loaded up with trash. XLB material sector, finally hit our measure move. Well, almost our measure move, but trade setup played out perfectly. We had a descending channel, bullish pattern. Basically you have a bullish move to the upside. You give back part of that move, and then eventually you break out of the descending channel, and then you get the measure move. Does that mean we're going to new all-time highs? No, usually what happens is it'll break down and then come back up and then run into resistance right here, and then we see what happens off that resistance. So it could very easily go to new all-time highs, but it could also just as easily come down here to a new low. So at this point in time, the easy move is done. We're seeing a little bit of momentum. We do have a blue slope line on the TJD, TDMACD, but there's no reason to get overly bullish after the move has already played out. I'd rather just wait and see what develops next. XLC communication, basically just hanging out at our, at our highs. We're putting in quite a bit of bearish divergence here. We got to pay attention to that. As we've been putting in consistently higher highs on price action, but we've been putting in like lower highs on our indicator oscillators here. So still looks bullish though. We're still on top of the 8 and the 21. Still got a nice strong slope to the upside and just melting up. Melting on up. XLY broke above a key resistance level. Did not hold as support, but we're able to come back on top of it. But we're just hanging out right here. Consumer discretionary, I don't love what's going on here. I don't like to see a breakout of a range and then retest and then just consolidation. And the truth is, these are getting real tight together here. It looks like this might want to try to retest lower prices and see what happens. But again, still powerfully angled to the upside, 200 exponential and simple, well below it. So, could see a pullback, but still looks good. XLE, Energy looking extremely weak. One of the few things that is not making all-time highs in these markets. You know, we got the initial move up and then failed to break any higher there. You know, we're now well below the 8 and 21, cross to the downside, barely just hanging out above the 200 exponential and simple. And then, you know, we basically got the hard buy signal coming out of the bearish control zone and went sideways. Got all these green histograms in a row and went nowhere. That to me is a bearish reset. You know, the indicators, oscillators have moved all the way to the bottom of the range. There's nowhere left to go. So they just float back up while price action goes sideways. And then when they're ready, we continue to move to the downside. So XLE, so far the worst. Even worse than the Russell, maybe. Yeah, actually, because at least the Russell made all-time highs this cycle. XLF, financial sector, just broke out to new all-time highs. You could argue it broke out and it's coming back down, testing the range. You know, seeing quite a bit of strength here. It's at elevated levels, but, you know, there's no reason that this can't continue to the upside until it doesn't. XLI, you know, up here retesting the top of the range here. You know, the longer it goes sideways here, industrial sector, the better it looks to me. The fact that it's just up in the top portion of the range in the channel and not selling off just tells me that this is basically just a consolidation before it continues back to the upside, especially with the potential of like unlimited infrastructure slash finfrastructure, which is fake infrastructure spending coming up here. You know, we basically have like a 1 point whatever trillion dollar package already going to come through theoretically, depending on politics. And then on top of that, you know, 3.5 trillion, call it 4 trillion, round it up to 5, you know, so probably, I mean, I'm sure at least like what, if we say, let's say 6 trillion, if 6 trillion, if even like 1 trillion of that goes into like industrial sector, which means probably like 10,000 of it will get spent on something actually useful. I mean, that's good, right? XLK, technology, all-time highs. Looks good, strong. Hard sell signal here. Basically just going sideways. We're seeing a little bit of bearish divergence here. But again, we're at all-time highs. There's no selling pressure coming in. There's no one left to sell. There's no one selling anything anymore. People are literally only buying. And then once prices go up, they just borrow more money and then they buy more. And then once it goes up again and their new stock goes up and then they have more, they just go out and borrow more. Borrow more, borrow more, borrow more. Lever on up. XLP, consumer staples, all-time high. Got the breakout. Measure move out of this channel would take us up to about the 1.618. I still think we're headed up to about somewhere in between like 73, 65, and 74. Still looks good to me. Nothing bad here. XLRE, real estate, had a little sell-off. You know, still looks good. I still think we get the move up here. We are seeing, once again, some bearish divergence developing. You know, some of these weekly charts don't look as good, but as far as I'm concerned, after the breakout now, I think more likely than not, we're headed up to the 1.382. I do expect us to tag the 1.236 and run into a little bit of trouble here, but I don't see any reason we don't get up here to like $50, $51, somewhere around there. Again, you know, everything's at like, well, most of these charts are at all-time highs, and in a blue sky breakout, people don't sell until they have a reason to. Some people will take profits along the way, but at this point in time, no one's taking any profits. People are literally just going out and borrowing as much money as they can and just buying more and more and more. So until the selling pressure actually shows up, I wouldn't expect any sellers. What's going to be, you know, the straw that breaks the camel's back? No one knows. XLY, select sector, consumer discretionary. Again, broke out from a key level, finding support at that level. I don't like the initial move down, but now here we are holding for now. This actually looks sort of weak to me. I do not like to see a breakout above a key resistance and then a failure, let alone a failure with another lower low than the previous failure, and then a new high, and then just consolidate at that level. I would expect it to come up here, bounce a couple times, and then move to the upside. The longer it just goes sideways here, the more likely I think it comes down. It doesn't have to come down far, though. It could come down to like 168. We're losing some serious momentum, and obviously 200 exponential and simple are creeping up. We'll see, though. If it consolidates here long enough, could easily continue to the upside. Transportation, one of the weaker ones, but starting to show some strength now. We did get the 821 cross back to the downside. We bounced the 200 exponential and simple perfectly here, and now we have crossed 821 back to the upside. Didn't quite get down to our target back here, but you know, it looks good. Is it going to come up here and put in a lower high? We'll have to wait and see, but it's definitely gaining some strength. We flipped the blue slope line over inside the bullish control zone, and the 8 and 21 across to the upside. That's bullish. Now, some of the components of the transportation sector, or like some of the, you know, smaller, more focused ETFs, don't look nearly as good. Jets looks bad. It's under the 200 exponential, and that has rolled over. It's under the 200 simple, but still has a positive slope, and it was unable to cross 821 back to the upside. Doesn't surprise me. You know, there's all kind of stuff going on with the airplane industry. You know, there's a bunch less flights. So if there's less flights taking place, how could we possibly expect this to be at new all-time highs or continuing to the upside? You know, that's basically like deflationary or bad for the industry. So that doesn't surprise me at all. If you got less pilots because some retired, you know, during the situation, if you got less jets flying because they weren't kept up during the situation because nobody knew how long it's going to last, because you got less flights, you got less airports, you got less whatever, it's all deflationary, and it's going to be very hard for this to make new all-time highs when that is the case. Now, we did just make those highs back in March of 2021, but keep in mind, that was not all-time highs. This is the all-time highs from February 2020, and before that, you know, we basically just went sideways on this from, you know, what amounts to December 2016. So this was basically just chopping sideways for 5 years, you know, 4 years or so, and then had a violent sell-off and then came up to a new, you know, to a lower high. So to me, this is one of the worst looking charts that there is. And again, without everything going back to normal and then better, I don't expect this to be making new all-time highs. This maybe is, you know, arguably giving us a more accurate picture of like what's actually taking place in the world versus like what the stock market is doing. Here we have Hale. You know, this one going back to 2018, you know, broke down from that level in 2020 and then just massively went parabolic afterwards. It's already up, you know, from the previous all-time high over, you know, basically double. It went up to $66 from $33. So while this still looks fairly weak, you know, it is below the 200 simple, above the 200 exponential, but they're both still sloped to the upside. But it looks like it's having trouble at this level. So, you know, is this just looking like a giant descending triangle and we're going to break down from it? Yeah, probably. UPS. Again, you know, we can kind of zoom out here and take a look at what's going on. You know, this thing went absolutely parabolic from its previous levels. Before that, it chopped sideways forever, had our big sell-off, you know, and then just went absolutely parabolic. So it was having trouble getting to higher levels, and then all of a sudden everything shuts down and everybody's buying everything online. So all of a sudden their system goes, you know, through the roof. Demand goes through the roof, and then they put out like their earnings and everything, which weren't bad, but their projections for, you know, demand was decreasing, and that's where this gap down came from. So what's going to happen now? Well, it looks like we're getting ready to come back up and try to close that gap. So are we coming back up to 208? Looks like it, probably. After that, what happens? I don't know. We'll have to wait and see. You know, if everything stays open and we go back to normal, you know, this probably decreases as we see like less and less people using this service because people are buying more and more stuff in person. If we go back into lockdowns, maybe the opposite. This thing goes to new all-time highs. FedEx, very similar looking chart right here. This is, if we look at this one in the broader picture though, it's basically a megaphone pattern, a giant broadening wedge. We had a all-time high back here in 2018, and then we put in new all-time highs here after that basically capitulation sell-off from September 2018 was taking us down and down and down, and then finally February 20th, you know, we absolutely dumped, fell out of the bottom of this pattern. And if we look at it on longer time frames, you can see why I have it drawn this way. But once we started finding support right here, went absolutely parabolic, but barely took out the previous all-time high. And now here we are essentially retesting it as support in line with our 200 exponential and simple. So again, what are we expecting to happen here? Well, if everything gets locked down again and everybody goes back to buying everything online again, and all of a sudden stimulus checks are coming out and everybody's getting paid to have kids and paid to stay home, and unemployment comes back and rent moratoriums go back into effect, and everything's great, and the government's just pumping out all this money to everybody, yeah, sure, this will probably keep going higher. But if any one of those things does not happen, if the economy stays open, if the government doesn't give people more stimmy checks, if they cut off unemployment, if you have to pay your rent again, if you have to pay your student loans again, any of those things, including all those things, happen, I would expect this to sell off violently, potentially back down to at least the heart line, if not, towards like the bottom of the range. This was not doing particularly great leading up to, what happened, let alone, what would you expect to happen? I mean, we'll have to see, though. We'll have to wait and see. U.S. oil, again, broke out basically from this little cycle high right here. Got our nice little measure move up here. Ran into some key resistance. Came back down, retesting it. Showing some serious weakness at these levels. Obviously massive underperformer. I always forget to do that. Obviously massive underperformer, as we did not even get anywhere near our previous all-time highs. This was back in, this isn't even the all-time high, but our last capitulation event was June 2014. And what happened? We came back up to a key fib level, got rejected, and then broke down from that level. And now we came back up to it again, exactly the same. So what we need to see happen is, what happens? Do we get a similar chop like this and then break to new highs? Or back to the old highs, I should say. Or do we come back down here, retest this, and then break back down to lows? So either one could happen at this point in time. I do not think, I know there's a lot of people arguing that, oil prices are going to go way down. Again, it depends what happens in the macro of the economy. Obviously, if everything shuts back down, oil prices are probably going to go lower. If everything opens back up and goes back to normal, prices will probably go back higher. The breakout of this range could easily take us back up to retest like some of this next resistance right here. But, the whole argument that solar and wind and clean energy and all this stuff is going to take over, that's fine if you're looking at 20 years from now. But what is going to change in the oil industry? What's going to change in the world in the next 3, 5, 10 years? Nothing. We can't just stop using oil. It's literally not possible. And look at what's happening right now. The United States, gas prices are going back up. They're not at all-time highs, but they're up 50% from, a year ago or whatever. And you got Biden, blabbering to OPEC, probably doesn't even know what he's saying, but they're telling him, hey, you need to produce more oil because prices are going through the roof. Well, we were building a pipeline and making our own oil and, shale mining. So why don't you just restart some of that stuff? But hey, whatever. I think oil probably goes higher from here, but again, we'll have to wait and see. This is on our monthly. Still very powerful trend to the upside. All green histograms, blue slope, bullish control zone. In my opinion, this is a bullish retest, and then we're going to see continuation to the upside. I would not be surprised at all to see oil back at $80 very soon, and then shortly after that, at least back to $100. If not, who knows? Maybe all-time highs? I don't know. We'll have to wait and see. It's going to be tough to get back to those all-time highs, honestly. But, again, there's so many different factors that go into that. So much can change. We could be headed to all-time highs and OPEC could change something and the whole situation changes. All right, so let's do tech since we cut that off last time. So Tesla, basically, we had this descending triangle running into resistance. We broke out to the upside. Now we're consolidating. So the next move up here would be $780. If we break through 780, this starts looking real bullish because we have that high, we have the low, we have a lower high, then we have that same low again. Then what we do here is really important. If we put in another lower high, we're coming back down to the lows. If we take out this previous lower high right here, that changes everything, and Tesla's probably going to new all-time highs. But we'll have to wait and see. I don't like how this chart looks on longer time frames. On our weekly time frame, it's starting to flip back over to the upside here and looking decent. Hard buy signal, couple green histograms, still well below the slope line in red. Starting to show some serious potential. I do like the flip of the 821 back to the upside on the weekly, so that's definitely a start. Definitely a start for Tesla. But again, if the rates drop down to 1 or lower, I think tech's going to explode. If they rise, vice versa, it's going to desplode. Uber looking extremely weak. We're well below our 200 exponential and simple. Exponential has flipped over red. 8 and 21, angle to the downside. I think we're going to hit one of our targets here. $35 looks pretty promising. After that, maybe 29. This is not looking great in my opinion. We have retested essentially those initial levels here, and we're basically coming down to. We got from the top to the bottom sell-off right here from March, the 1.236 Fibonacci extension perfectly, and then from that bottom to the top right here, we have our green fib levels. We hit the 236 perfectly, bounced up and put in a lower high. So I think the next target is going to be our 382, which is a green box, or the 0.5, which is the blue box. And then those also correspond with the 786 in orange and the 618 in orange as well. So those are two very key targets. And from those points, I will definitely be looking for at least temporary scalp trade. And then obviously want to see that level, especially if we get down to the lower level. I really want to see that hold, as that was where the majority of the price action traded above. If we start to break down from those levels, this could really be in trouble. But overall, I don't think Uber's going anywhere. But who knows? Regulation could change that as well. So we'll have to wait and see. Pinterest had some nice trades with this, but now we're just operating inside the range. We got the gap down. People try to get bullish on this, but it looks terrible to me. I think we're coming down here to a new low. That was our breakdown from 53.84. We bounced originally. We're almost at that level again. Once again, I will probably take a scalp off of like the $50 or $46 range, depending what it looks like. We're seeing all red histograms, a very powerful red slope line. We're very clearly inside the bearish control zone. So I need to see some kind of life out of Pinterest before I'm interested in it again. There's a reason it had that big gap down. Wish. Wish did exactly what we were saying. So we had put in play this hypothetical target to the downside of the 0 down here. That is not a valid fib. Obviously, the previous low was down here. So we should have had this in play at that low right there. But we could see some very clear resistance and support, and it didn't quite line up with that bottom. So that's why I was expecting a lower low on that. And then, of course, we had that massive gap down. The gap down took us not quite to our target yet. So again, I did not bite quite yet. But look, it literally touched the top of our box perfectly. So you could have easily taken a scalp on that from that $6.73 range. Would have nailed the absolute bottom and then gotten a nice move out of it. Unfortunately, I think this was a reaction rally. I mean, it had a violent gap down from our close to the low right here was 28%. I think this is a reaction rally off that 28%. It's going to run into some serious resistance right here at that previous low. After it runs into that resistance, I expect it to come down slightly more and hit our target, which is the 2.618, and also our target for the 0, at which point in time, I think there's a very high likelihood that would be the actual bottom, and then we could get a nice rally off of that. But if that area breaks, there's lots of other places in between. We don't want to see it come down to the 3.618. That's $3. So that basically means that something went wrong. But as far as I'm concerned, this is looking very, very appetizing at these levels, as I was very much expecting us to come and put in a lower low, as I have stated multiple times, and we came down almost to it perfectly. So Airbnb. Airbnb got a nice little move off of our entrance area right here. We're at resistance now. So at this point in time, I really want to see what happens here. If we're able to break above this level, I think we could easily get the rest of the move to play out. If we do not break above this level and start to show some weakness, I can just as easily take a step back from this one and wait for a better entry. But essentially at this point in time, there's so much overhead resistance. I talk about all the time. After this violent sell-off, we could not get back above this 618 level from our initial bottom to our top up here. So for us to all of a sudden get rejected at the 618 and then break through it and get up to 0.5 is possible, but it's equally possible that we top out right here and put in a new low. And in my opinion, this is predominantly a bearish trend, obviously. And, like I always do with a box, just to kind of show, basically anyone that purchased in this area is still upside down. So if you look at the majority of the price action that took place is above this level, all the way up to like 220, and then there's just little bits of price action that took place underneath. So in my opinion, there's still a lot of overhead resistance on this. So when we reach a key resistance with a ton of overhead resistance, I expect that that's probably going to fail. We're also at extremely high levels after that previous little move right here, even higher levels than the previous high. So, we're basically putting in some bearish divergence. Here was our high on the indicator oscillator. Here's our high on price action. Here was the high on the on the indicator oscillator. Here's the high on price action. And now we're at that same high. Now, is it possible we just break through this level and start getting daily close above this level and move up and invalidate that bearish divergence? It is 100% possible. And again, the momentum is in favor of this. But again, there's a lot of overhead resistance. So while I do like Airbnb and the chart just doesn't look great right now, but we'll see what happens. But I will be quick to, cut and run. Vodafone, we've been looking at this one a little bit for a request recently. It is starting to show some life. While it's still underneath the 200 exponential and simple, we could easily get that push up here. I do like that we got the 821 cross, but I mean, realistically, like 3 to 4% up to retest the 200 exponential and simple, and I would expect them to act as resistance. We are definitely picking up momentum. We're inside the bullish control zone, but when we look at the longer terms on this chart, we have quite a bit of resistance here. And then obviously, if we go out to the monthly, we're starting to pick up steam on the monthly here. And I think that there's potential for like easily a 36% move up here. But if we look at the weekly, that's where it's looking a little sketchy. Could easily start to roll over right here. I think, honestly, this one's probably worth taking a stab at. This is basically at our entry level. I like the risk reward on this. We held that key support line that we were asking for. I mean, yeah, I think I'll probably just throw a little something at this. Bumble looked like he was going to lose that range and then had a very powerful push up here. Sold off a nice little chunk of it, but kind of recuperated at the end of last week. Overall, though, nothing has changed on Bumble for me. Nothing has changed. Maybe we roll this back over, flip the 821 back green, and we push back up to $57. I still think it's going to be very tough to get through this level. And again, once I've had a successful trade on something, take profits, I usually just get out of the way and let it do its thing for a little bit. Baidu did exactly like we discussed, just put in a brand new low. Everybody was thinking this is the bottom, this is it, we're going to bounce from here. Reaction rally. We just took out that low again. We're nearly to our next target. After that target down here at $109. This target is $143. So again, I'm not trying to pick up, pennies in front of a freaking steamroller, if you know what I'm saying. Looks terrible on longer time frames too. Alibaba did not quite take out that previous little low down here, but again, it's just bleeding out, showing weakness. It's very difficult to get bullish on any of these China stocks right now because they're just, their economy doesn't look good. They're having outbreaks left and right, closing down ports. The government's like smacking people down left and right. There's basically like a Cold War, trade war going on right now. Their policies are terrible. They got all the slavery stuff going on. I mean, it's tough to invest in China. I like China in the long term, but in the short term, the risk reward ratio for me is just not, it's not there. It's not worth it. Will I take some technical trades, some scalps off of some key levels? Yeah, sure, probably. But I'm just not ready to just jump in and say, I'm investing in China for the future. Not a good time, in my opinion. And I've been saying that for quite some time. Tencent looks terrible, broke down from the 200 exponential and simple. They have rolled over to the downside. The slope on everything is bad. The cross is bad. It looks terrible. This looks like basically a reaction rally off of some previous supports. I mean, there's a lot of support in this level. We have the previous all-time high right here. A couple little peaks along the way. I would expect any of those to act as support. but right now it looks like continuation to the downside. Diddy did exactly what we said, came up, filled the gap. It's been bleeding out since then. I expect it's going to continue bleeding out, and I suspect that we will probably be putting in a new low very, very soon. This thing has been getting absolutely crushed, and I suspect it will continue to do so. BZ Kanzun Limited looks much better. Came up, got through that very, very difficult area. This blue support line or resistance, I was expecting to act as some strong resistance. We consolidated here long enough, got the 821 cross, broke above it. This does look like a slight rejection candle, but we are inside the bullish control zone and all green histograms. I think if we consolidate here long enough, this thing moves back up. But again, I have no interest in it right now. NEO, looks better than most Chinese stocks, but looks like it's getting ready to break to the downside. 821 are angling down, getting ready to cross. We lost the red slope here. We're below the 200 simple, slightly above the 200 exponential, but we have bounced it a bunch of times, and each time we're getting, less and less of a bounce. It looks like eventually we're just going to consolidate here, and then it's just going to pour out. So, retest the lows here again at like $30, and then after that, this thing could really let go. There's some key supports along the way, but this thing could easily lose 50% plus of its value very quickly if it starts to lose some of these key levels. EDU, this is New Oriental Education and Technology Group. This is one that I was looking at. Again, this thing got absolutely destroyed because of the recent regulations. It was at $20 basically and sold off down to $2. I don't like picking bottoms on stuff like this, especially when there's massive regulations going on and everything. It did leave a massive gap from 560 or whatever. It's starting to show some strength here, possibly leaving the bearish control zone. A bunch of green histograms getting ready to flip the slope line back over blue or flipping it back over blue. I really want to see what happens right here. The longer this consolidates at this level, I think the more likely it is that we get a burst to the upside. But I mean, let me put it this way. I'm paying close attention to this one, but I'm not quite ready to bite yet, if that makes sense. Not quite yet. I mean, but when you look at a chart like this, I mean, do you really want to be the guy who catches the knife on this thing? I mean, we could easily, where are we going to, $1 next? $1.12? I mean, that's like a support here, So it's got some serious potential. This was like a previous top, support along the way, broke through it, resistance. This is a key level it could easily bounce from, but at the same time, I mean, that is a massive candle. And, on the monthly, I'm just not quite ready to jump in front of that thing, when it could potentially, maybe it goes to 5 cents. We'll have to wait and see. If China says all of a sudden your company can no longer do what your company does, what's it worth? Nothing. It's worth nothing all of a sudden. So we'll see. But I'm paying attention to it. TSM, Taiwan Semiconductor, by far one of the weakest in the space and fundamentally scary place to put your money right now. Hanging on to the 200 simple, 200 exponential just below it. I expect this to just continue showing weakness, and it looks like it wants to break down. It's barely hanging on to the 821 at these levels, but the longer it just goes sideways here, the tighter they're going to get, and then the direction the move goes in it's just going to be all the more violent. And at this point in time, it looks like the move's going to be to the downside. That could change, but we're so far above the 200 exponential and simple moving averages. I mean, this thing could come down to $70, and I would not be surprised just looking at the weekly. Intel, I mean, now they got Bitcoin on their balance sheet, so maybe it's the next meme stock. I mean, probably not. I'm seeing triple bearish divergence here. Let me put it this way. This is the 2000 high. The only things that have not made a new all-time high since 2000 are Intel and MicroStrategy. So if I had to pick one, which would I rather invest in, Intel or MicroStrategy? I'd rather invest in Intel. But, they're pretty shitty. If it's been 20 years and you haven't been able to take out your previous all-time high, you're probably not doing great. And then triple bearish divergence on top of that. Probably not the best place to put your money. it's probably cheap and doing shitty because it's doing shitty as a company. Nvidia looking good, looking strong. Was able to avert that cross right here. Got a slight cross. Coming back up. Looks like it's headed back to new all-time highs. We are losing some strength on some of our key indicator oscillators. We'll see what happens though. It still is strong. And again, I don't expect any like sudden capitulation moves in any of these things. Meme stock, AMD. This thing went parabolic off the meme stonkers and came back down, found some support at the 1.236, topped out perfectly at 1.618, got rejected at the 1.382. So does it come up to the 1.5 at $115, or does it get rejected from here and come back down to the breakout, the 1 at $99? Who knows? Go on Reddit and you let me know. Looks weak though right now. Looks weak. This was probably a reflex rally off of a dump, off of a meme stock pump. ARKK. So Cathie Wood made some good investments lately. Gotta give her props for a couple of her recent investments, and somehow still ARK is negative for the year. So here we got back in December 7th of 2020. The price was exactly where it's at right now. And so any money that you gave to Cathie Wood in the last 8 months at this point in time has gone sideways to down. So if you bought anywhere on the way up, you are negative. If you bought anywhere below here, maybe you're up a couple percentage, but overall complete failure as far as I'm concerned for 2021. Great job, Cathie. Hooray. 200 exponential and simple are still decent. We're slightly below the 200 simple. 200 exponential is still below us. So we're above the 200 exponential, but below the 200 simple. But the longer we just hang out at the 200 exponential and simple, the more likely we are to just lose these levels, losing momentum. Looks like ARKK is going to take a DUMP. ARKF, again, let's look back here and see where this was at. So December 23rd or January 8th. So again, the last 8 months worth of price action has netted you nothing. Maybe you bought at the bottom right here and you're up a couple percent, in which case, good job on your 12%, while every other index in the market did better than that. But as far as I'm concerned, these ARK funds are trash. Short term. Long term, they're probably very good. And I like a lot of the company names in them. But if Cathie was a good trader, why is everything going down? So you have to be very careful in an actively managed ETF when the active manager of the ETF can't turn a profit in a 8-month period while most things are making new all-time highs. What does that tell you? It tells you Cathie Wood fundamentally able to pick things in the long term. Pretty good, probably. Pretty good based on last couple of years. But as far as her actual ability to trade and actively manage funds, I would say she doesn't know what she's fucking doing. I would say that probably if she would have just kept Apple and not sold her cash and bought a bunch of trash that has literally just been going down since then, she'd be better off right now. Yeah, that's actually a fact. Skills. We were talking about this potentially being an area for a quick little bounce here. Looks like shit. If it loses this area right here, maybe find some support at $11. It looks like it's going back to $10. It looks like it's going back to $10. So SPAC's getting spanked. Skills getting dunked on. Getting dropped all the way back down. Headed to 0. Yeah, probably. No, not to 0, but it looks like shit. Teladoc, hanging on to this 382 level, barely. It looks like it's going to come back down here to 381, below 200 exponential, below 200 simple, angle to the downside. It looks like it wants to take a dump. Headed to 115? Probably. Yeah, probably, guys. Probably. Terrible. Again, wiping out gains from back to March of 2020 prices. March of 2020. What was March of 2020? I wonder. So we just wiped all that out. So all the good stuff that happened between then and now for Teladoc has been wiped out on the chart. Why? It should literally just be going parabolic. Things should only be getting better. And even if it started like slowing down a little bit, you know, because things are reopening and people are going to actual hospitals and not using the teledoctors, you know, why is it just back to those levels again? Shouldn't it just be like consolidating up here somewhere? It was probably extremely overvalued to begin with. It was probably overvalued going into that, and now it's probably even more overvalued, and now it's back to, you know, what it looks bad. It looks bad. If you're below the 200 exponential, below the 200 simple, and they're angled to the downside, and fundamentally your business should be still doing well right now, and you've somehow wiped out a year and a half worth of gains during the best possible scenario for your business, something's not right. Something is not right in your business. Corsair, again, I do not think this thing has bottomed. It looks terrible. The 200 simple is still angled to the upside. 200 exponential, angled to the downside. This thing is about to roll back over. It's about to roll over, and we're about to see the 200 exponential and simple both angled to the downside, 8 and 21 to the downside. Sold off over 50% of the move so far. I think we're headed down to the 618. I do love me some Corsair. I literally use it in my computer. Their stuff is good. It works excellent. But does that mean that their stock cannot be overvalued and headed back down to $23 or better yet, $18.50? I mean, God forbid. Let's hope it rallies at 23. I may even take a buy somewhere in this range here. 23, I'll definitely take a stab at it. But, I mean, this looks like shit. Starting to pick up a little steam here. But, I mean, what's it doing, though? You know, buy, sell, buy, divergence signal in the bearish control zone, bunch of green histograms, and it's just gone down. So is that some bullish divergence potentially taking place here? Yeah, maybe. I don't know. Maybe it's worth a stab right here. There's probably a scalp to be had, but I mean, at this point in time, if it breaks down from this level, I think it's just going to be a quick little run to 23 bucks. So do you want to lose another like 25%? Because you jump in too soon? No, I'm sorry, 14% because you jump in too soon, or 30%? I'd rather just be patient. I mean, it's clearly in a downtrend. Unity, looking good. Got a nice little bust. We were talking about it closing above the 200 exponential, 200 simple, angle to the upside, 8 and 21 are crossed, and boom. Rocket boosters engaged. You know, is it just coming back up here to fill this gap? I mean, $147. Yeah, it probably is. After that, let's see what happens. You know, gonna run into some resistance at like 138, consolidate, and then keep moving up. I like this fundamentally and technically. The chart doesn't look amazing, but it's starting to look good. Starting to look good. Zillow. I mean, this is another one where, you know, I mean, it's not as bad, but it's wiped out its gains since September 2020. So, you know, I mean, almost a year wiped out now, while the housing market's at all-time highs. So was this just really overvalued and now it's going back to fair value? Maybe. Is this telling us something? Telling us something about these markets, about the housing market? Is this a canary in the coal mine for the housing market? And what's going to happen in it? I don't know yet. We'll have to wait and see. Is this doing what we spoke about specifically that Bitcoin and most assets do? Let's pay attention to this, okay? Because this is a very important chart right here, okay? Parabolic uptrend, all right? All-time high, sells off, finds some support, breaks down below 200 exponential and simple moving average, retests 200 exponential moving average, fails, comes down, puts in, you know, some sort of bottoming pattern, comes up to the 200 simple moving average, gets rejected, and then puts in a new low. Where do we see that happening potentially and previously? Crypto. So we need to be very careful because Zillow is doing what almost every asset does when this exact signature plays out. So, you know, I don't mean to hurt anybody's crypto feelings, but let's be real. We look at enough charts and we see this happen enough times and we expect it to happen statistically. But yeah, why is Zillow looking like shit right now? I don't know. Maybe you could tell me, but are we headed down to the 382? Yeah, we really are. We really are. $84, maybe the 0.5 after that. I mean, that I would expect that area to hold. That was our previous high in 2018. That was our previous high before the dump in February 2020, which that's like basically a double top and then capitulation. I would expect that to be a very, very strong support. So do we get down to $65? I don't know. You know, if we come down here to this 382, which it looks like we're going to do, it's going to look like a left shoulder, neckline, head, and then neckline, and then, you know, possibly a bounce off that 382 back up to this area, and then, you know, head and shoulders breakdown. That's how we get to the 0.5. Do we have to get there? No, but does this look good right now? No, it's putting in literally its lowest close of this entire cycle. You know, in over what? In over a year, we said? Yeah. So Zillow, not looking good. Housing market to follow? I don't know. Stay tuned and find out. Probably when the rent moratorium ends and everyone scrambles to sell their house so that they don't have to worry about squatters living in their place and the government telling them they're not allowed to collect rent, but they have to keeping up with it and whatnot. Probably going to be a flood of houses onto the market. Will the moratorium ever end? Probably not. Not in the United States of socialism, where you don't have to pay your bills and the government won't pay them for you. They'll pay you, but you don't have to pay the people that you owe money to, because that's great for the economy. Zoom video. You know, basically this descending channel, usually what happens, you break out, come back down, retest those levels, and then break to the upside. Is that going to happen? I don't know. It looks very weak. It looked like we were going to gain some steam right here. Looks like now we're just coming back down, retesting these levels. So what level are we going to retest? I don't know. I mean, we got back above the 200 simple right here, saved it, came back down to the 200 exponential, like double topped, and now we're back down at the 200 exponential again. So is this just going to be another one of those situations where we go parabolic, come down, retest our moving averages, put in a lower high, come back up, get rejected at the 200 simple, the 200 simple slope rolls back to the downside, and then we break down from the 200 exponential and put in a new low? Is Zoom video going back to $271? Yeah, probably going lower. It's probably going down to like $230. And another perfect example of what typically, statistically, more often than not happens once you break down and put in this exact signature. Bitcoin. Square, you know, still range bound, exactly like we expected. You know, top, headed back down here somewhere. Where's it headed to? Probably the heart line, 231. If it breaks down from those levels, you know, that's going to be 200 exponential and simple. Probably not going to break through them. If it does, 192, range bound. For how long? I mean, this thing has been range bound since December of 2020. You know, all the crypto moves that have happened since then, crypto went absolutely parabolic, Square went sideways. You know, payments went out of control online using, you know, PayPal and all these like digital payment processors. You know, as people are buying stuff online and using all these different services and not using the traditional banking system and not shopping at their local stores, just buying everything they can online. And yet, what did Square do? Went sideways. This should have been the best time ever for Square. So was it already priced in? I don't know, but sure looks like it to me, as we just went sideways. PayPal, same thing. You know, range bound at this point in time, top tier, double top tier. We crushed it on our PayPal trade. Absolutely beautiful. Basically stole the top. If, you know, came back down, we could buy back in now. I kind of like this support level. I don't like what's happening here. We're just consolidating. I think we easily get down to like 262. But the truth is, we could easily come all the way back down to the bottom of the range, 225. I don't like how this chart looks. Bearish control zone, starting to show a little bit of life. I want to see something out of PayPal sometime in the near future. This doesn't surprise me, though. eBay dropped PayPal. I'm sure that was not good for them. Their numbers sucked. Could they easily come back up here and fill this gap and do that little 9% move? For sure. Are there better things to trade? I think so. Speaking of eBay, absolutely parabolic. Did exactly what we spoke about. I did not like this initial retest right here as we broke down below it. We came up here and put in a new high and then started selling off violently. And that's when I said this is a second chance for eBay to show us what it's got. And we want to see this area hold here. And we want to see it hold without even potentially breaking down below there, and that's exactly what it did. It held here, had 3 candles in a row, closed above the 821, and then had a very, very nice move to the upside, up over 10%. And I do expect this trade to play out at this point in time and give us the completion of the measure move up to $78. Yep, looks good. Looks very good. Could it double top right here and just sell back off and fail? Definitely could. Definitely could. But that's why we trade risk reward and probability. Snapchat, or Gap Chat as I like to refer to it, gapped up from $63 to $74, consolidating at the top of the range right now. Does it come back down and close that gap? Probably. It probably does. How long before it does it? I don't know. It's probably going to line up with the 200 exponential and simple, showing some definite weakness. At all-time highs, though. Maybe it's a breakaway gap and it just goes to infinity and beyond. But probably not. Apple back here retesting the all-time highs. We have a high. We have another high. We have the same high once again. Almost. Could go either way. Hard buy signal. Basically just went sideways. Reclaimed that little slope line that we had from way back here. I think Apple goes higher. I think Apple is probably one of the best charts. Amazon, and speaking of Apple being like one of the best, where did Kathy sell her Apple at? Ooh, what was it? Right here. This was probably Kathy's Apple right here that she sold. And it's literally just gone parabolic since then. And ARK has done the opposite. It's back down here at the bottom. So she sold the best thing she had and bought a bunch more of the shitty stuff she had. So, sorry, Kathy. Sorry, Kathy. I don't mean to bust your lady balls, but... Amazon. Again, what's wrong with the Amazon chart? Well, let's look at Amazon. Amazon was back at these levels in July of 2020. Or maybe you want to give them some slack, man. You're just picking tops. August of 2020. So one entire year during the absolute best fundamental and technical. Like, if you literally told me the whole world was going to shut down and the only thing you could do is go to the store and buy groceries or buy shit online, I would tell you Amazon was going to go absolutely parabolic. Instead, what did Amazon do? It literally went sideways for the last year. Now, before that, what happened? It went parabolic for a few months, for sure. It doubled. Well, not quite doubled, but it did great. But then why is it literally doing shit after that? I mean, it broke out, and what was that breakout? It was a total fake out. It was a total throw over, and now here we are back at the 200 exponential and simple. So what's going to end up happening with Amazon? I mean, it's probably just going to go sideways for a while, but I mean, is it going to break down from these levels and crash the whole entire market? I mean, if there's going to be one stock that helps crash the entire stock market, is it going to be Amazon? If you said one stock is going to crash the market, which stock is it going to be? I would say probably Amazon. So I don't know what's going to lead to it. I don't know. Maybe it's not going to happen. Maybe it is. But are we headed back down to $2,800 on Amazon? People are probably not going to just hold this when it just sells off after underperforming for the last year during what should have been a phenomenal period. And by now, what's happened? All the little shitty small businesses and medium businesses that have, went through the growing pains of getting online and setting up their stores and going through the whole situation and building up their like little mini online infrastructure. Now Amazon's going to have more competition, as where back here they had little to no competition and were able to like dominate the space. So is Amazon going to now come back down and start testing these key levels while like other stores steal market cap from Amazon? Yeah, probably. Massive gap though. Could it come up here to 35.86? Definitely could. 10% move up here. I mean, nobody seems even like worried at all by Amazon just like gapping down 7%. Nobody's worried about that. No, nobody is even like, I haven't even heard anybody talking about it. The number 3 stock in the S&P 500, the third most heavily weighted stock in the S&P 500. Thank God for Apple and Microsoft. I mean, are you serious? Are you fucking serious, Amazon? Fuck. All right, let's keep rolling here. Facebook, uh, looks okay. I mean, yeah, it looks okay. I don't see any reason why this thing doesn't break to new highs sometime in the near future. Google looks good. Definitely, just sideways consolidating. Well, I mean, let's be real. I'm not going to get bearish on any of these unless the chart tells me to. Netflix, again, total trash. It has been going sideways now for over a year. Sideways, range bound. If there was ever an opportunity for Netflix to do well, this was it, okay? So when it crashed to its low in March of 2020, when it crashed, and then it ran up from March to July, when it had this run up from, basically doubled in price, was that everything priced in since then and it's just went sideways for a year? Or did it run up too high and now it's trying to catch up? I mean, I don't like how this price action looks. The 200 exponential and simple are basically flat now. As a matter of fact, they were actually negative slope slightly and we only barely, held on to them. So the longer we consolidate right here, the worse this chart looks. I mean, it looks like it basically broke down from the 200 exponential and simple, pulled a Bitcoin, got back above them for a little bit, and then now it's failing. So is it just going to come down here and capitulate from this level? Are we going to see this back at 400 bucks? I mean, probably. I would not be surprised to see this at $415 roughly. Or let's round. Let's call it 420. So is Netflix going to 420 and chill? Probably. And Microsoft all-time highs looks great. Bearish divergence. Is it going to play out? No, it's probably just going to keep cruising up to the top. It was probably just a bullish reset, and Microsoft is going to keep crushing. Let me jump into the chat, see what's going on. Oh my gosh. You guys asleep over there? What's up? Can you hear me now? Am I even live? If anyone's alive in chat watching, can you please let me know? Because if I've just been doing this for an hour and 16 minutes and you can't hear me, and there's still 5 people watching, there's something wrong with you guys. But I do want to remind you, while you're here, this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. All right, what do you guys want me to do? Do you want me to do some... Let's do crypto. Yeah. Okay, so came back up here, filled our gap on the Bitcoin futures chart as expected. As we specifically talked about, got exactly to the level. There's a ton of resistance at this level. The futures chart looks way better. Hey, my man Ray, appreciate you, brother. Thank you. Good to see. Sometimes I wonder. I think that's the longest we've ever gone without a comment. I mean, I know I'm not popular, but I'm surprised nobody's talking. But I do also crush everyone's hopes and dreams. So maybe you guys are waiting for that, and then it'll open you up a little bit. So don't be shy. Bitcoin futures, this chart looks way better than the spot market chart. The 200 exponential and simple are both still powerfully angled to the upside, and we are well above them while we are at resistance. Overall, this looks good. Very powerful in the bullish control zone. Everything on this chart on the daily looks good. Everything. Do I actually have? Let me put a Bitcoin chart up here too. I was doing some stuff and messing with some things, and I deleted the old Bitcoin chart afterwards inadvertently. So here's our Bitstamp chart. Okay, so let's talk about this here. So we reclaimed the 200 simple. The entire crypto space is extremely bullish. Altcoins are breaking out, some to new all-time highs, because now we're going back to the moon. Sure we are. Sure. We are showing some clear bearish divergence on the daily chart right here between our two peaks, as we have a peak here and then a lower or same peak, depending if you want to look at it very closely. And then here we clearly have a peak there and then a higher peak. Could we easily just come up here, start putting in new highs? Move this back up to new highs and invalidate the bearish divergence? It is definitely 100% a possibility. But right now, there is bearish divergence developing. I want to talk about something that I specifically talked about in the trade group that I have not talked about on the channel. Or maybe I have. I can't remember. But we're going to talk about it anyway. This was our target. This has been my target the entire time from when I called out the very clear triple bullish divergence at the bottom of the range right here and the break of our channel. Our target was first to measure move, the 382, 200 exponential moving average. Then we found support. Then it became the 0.5, which we failed to actually get to. And then obviously next target is the 618. I'm still long spot for the record. I am long on a bunch of shit coins as well. I've taken some profits along the way, but full disclosure, I am still long on crypto. That being said, look at where we topped out at exactly the 0.618, okay? From the top to the bottom of the initial sell-off. And we are slightly back above the 200 simple moving average after breaking down below the 200 exponential, getting rejected at the 200 exponential, consolidating, putting in bullish divergence, coming back up, finding support on the 200 exponential, and then breaking above the 200 simple. The exact situation that we demonstrated earlier in the stream based on multiple assets and what they had previously done. So now let's look at this one. This was our little mini bull run in the middle of 2019. And let's look at exactly what happened in this situation too. We broke down below the 200 exponential and simple. We broke back above the 200 exponential and simple, consolidated, and then we sold back off, flipped both slopes back over to the downside. Now in this case, we actually came back up once again a few months later and put in another high right here, slightly higher, basically let's call it same high, but slightly higher than this one right here before our capitulation event, which was the Rona D, that Rona dump. So let's pay attention here to what exactly happened in this situation. So let's take our Fibonacci's, let's take our top right here, and then let's take our initial sell-off and see where we topped out here. And again, I'm sorry, you probably haven't seen this yet because I don't go on Twitter or social media or anything, and I don't just like tell you guys how great everything is and how awesome it is. But I tell it how it is. Let's be real here. So we sold off here, put in our low, came back up to the 618 of the dump, of the dumpy dump. And then what happened after that? We went exponentially to the downside. We sold off over 50% of our value in a couple of days. We went from over $10,000 to $4,000, under $4,000. Okay, so let's not get too overly bullish just yet. And then from the initial sell-off, that's from when we broke down below the 200 exponential and simple. So we've got to be real careful with some of these moves here and how important some of these levels are. If we look at where we went from the initial sell-off to the top to our initial bottom after we broke down below 200 exponential and simple, and then we pushed up to the upside, we fell just short of the 618, but we topped out at the 0.5 before selling off to a lower level. So we see that same pattern play out twice between the 0.5 and the 618 that we need to be, in my opinion, that we should pay close attention to. Let's look at what happened here too. This is our top in 2017. Once again, we broke down below 200 exponential and simple, bounced back up. We're unable to maintain them as support. Flipped the slope on the 200 exponential to the downside, got back on top of the 200 exponential, got rejected at the 200 simple moving average, and then flipped them back over to the downside, and then sold off for the next year and entered into a bear market. Let's check what happened there. From our high to our low, down here, and let's see where we made it up to. Well, we fell just short of the 618. Just short of the 61.8% retrace from the top to our initial sell-off. So again, that same level between the 0.5 and the 618, that golden retrace zone of the move down. We had a reaction rally, a double top psych out, where all the moon boys, once again, I remember this exact time too, all the moon boys, we're going up 100,000, $50 gazillion, $1 trillion Bitcoin. We're going to live in the citadels and everyone will be our peasants. And then they just bled out for another year and they all capitulated and quit and gave up. So again, let's be real careful here. Could I be wrong? Am I long on Bitcoin? Am I long on crypto right now? Yes. But am I extremely skeptical of what's taking place right now and think that there's a very high probability, over 50%, that we go into a prolonged bear market? Yeah, 100%. I'm 100%, at least 50% sure that we're going into a bear market. Without a doubt. 50%. Maybe 51%. But based on what's happened here on the chart, it's a 100% chance that we're going into a bear market. But I don't like that. I don't like those odds. I'll say 75% chance that we see a bear market before we see a new all-time high. But again, that's just based on the charts, in my opinion. But mostly the charts. So then let's look at our all-time high at the previous bull market from 2013. And then we obviously sold off. We're going to go from the top, which was, what is that? 1,000. I thought it was 1,300. 1158. I'm sorry. So from 1158 till, again, let's look at this exact situation too, and the pattern that's playing out here that people don't actually see or recognize. What happened is we break down here, find support, put in a lower high, come down, find support on the 200 exponential, break down below it, find resistance to the 200 exponential, break back above it, get rejected at the 200 simple, consolidate in this range, and then go into a prolonged bear market. Where do we make it up to? In between the 0.5 and the 618 of the top to our initial bottom right here, and then bear market. So every time we have literally sold off between the 0.5 and the 618, sold off heavily, broke below the 200 exponential and simple, flipped the slope over on the 200 exponential, got back up to or slightly above the 200 simple moving average, somewhere in between the 0.5 and 618, 50 and 61.8% retracement of the top to the bottom of the initial move, at which point in time we then went into a prolonged bear market that lasted over a year and had a sell-off of, from that top to our bottom, roughly somewhere between 77 and 85% of the way. So I would say there's a pretty good chance that literally every other person that is doing technical analysis is wrong, and I'm the only one who's right. But again, I'm long. I'm long on crypto. I'm in crypto right now. But have I taken some profits along the way? And am I continuing to take profits at key levels? Am I ready to flip fully bearish at any point in time? Yes, I 100% am. But right now, we're still looking okay. Still looks decent. But let's just keep in mind that last time we spent 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days above the 200 simple. And then all of a sudden we just started selling off finally. Okay, so now we can pay attention to just one more thing. And I'm sure I have crushed quite a few people's hopes and dreams at this point in time. Let's pay attention to what's happening here. Because this time it's probably different. It's probably going to be different this time, guys. From that initial bounce to our top right there, let's look at where our target was for the bottom of that move. So I'm going to turn that one yellow. Oh, I don't think I have the 2.0 on here. I mean, obviously I don't. Hang on, I'm going to add it really quick. Oh, there it is. There you are. What are you doing over there? Okay, so from our top to our bottom, and then from our bottom to the top of our bounce, which was that between 0.5 and 61.8% retracement, we then sold off, and our Fibonacci extension was the 2. So it took us down to the 2. Okay? It's 100% plus another 100% of the initial dump. Now let's look at this one. From our initial bottom right here to our bounce between the 0.5 and 61.8% move. And where did we come down to? We came down in between the 1.618 and the 2. And that was the bottom of our bear market. So far we have a 2 and like a, let's say 1.75. And then our next one. Oh wait, let's do our baby one. You guys remember it was obviously from here to here, and that was our 61.8% move. So we're going to take from the bottom right here to our top right there. And then we had the capitulation move right there, that Rona dump. And where did that go to? Exactly to the 2. 100% of the initial move up, and then another 100% move to the downside. And then let's just say, hypothetically, if I'm right, and the entire rest of the world, except for Peter Schiff, who hates Bitcoin, but he always hates Bitcoin. I love it sometimes and hate it when I'm supposed to. Let's just assume that maybe everyone else is wrong, and I'm going to be right on this, and that we are actually topping out roughly in this range right here. Let's just assume, based on literally everything that's ever happened before, and that this is actually an A, a B, and then a C wave down. That says that our low is going to be 16,766. So do I expect Bitcoin to go down to 16,766? More than 50% probability would say yes, I do. Yes, I do. So, okay. Now that everyone has left and I'm back alone again, I might just be a masochist. Maybe I'll just enjoy hurting people. I don't know. I don't think that's masochism. You know what the truth is I actually like enjoy helping people. But before people realize that I'm right and I'm helping them, it's like I have to hurt them first, and then they have to get mad at me, and then they have to lose all their money, and then they have to come back and find me and go, hey, you really know what you're talking about. So now I'm back for good. So Ethereum got a nice push up here exactly to our target. We spoke specifically about this in the trade group, took a beautiful trade on Ethereum, and now here we are. I did take some profits along the way, in this range back here. Could we easily continue to the upside? Sure, we definitely could. Could we go all the way up to like $9,000 or $10,000? Sure, anything's possible. Do I think it's likely? No, I think it's very possible that Ethereum has in fact already topped out, or is very close. Well, I don't think it's already topped out. I think it's very close to topping out, probably somewhere around here. Called the top exactly perfectly based on the 2.618 on Ethereum. Sold that our Ethereum at over $4,000. Bought more Ethereum back down here at under $2,000. Probably just not worried about taking profits, but what do I know? Ethereum Bitcoin chart looks good. Breaking out of our key patterns right here, consolidating above the top of the range. It does not mean we cannot break down from this level, but we are outside of this range as far as I'm concerned. Depending on how you draw it, you could argue that I'm being a little nitpicky on this. Maybe could have something a little closer to that. But as far as I'm concerned, this looks bullish right now. Tells me that Ethereum is going to continue gaining value in relation to Bitcoin, but we are clearly losing some momentum. Oh, I did want to mention that also. This Ethereum chart looks very weak here. We've had 4 red histograms and 1 green histogram, and meanwhile we're like breaking out to like new highs consistently. And we also have the sell buy, and then at the top of the range, looks like we're about to get the sell, the divergence signal. This is the top signal. But again, altcoins are probably just great all of a sudden. I'm sure a lot of stuff has just gotten way better in the altcoin space, and that's why they're all like doing better than Bitcoin, and some are at new all-time highs because they're probably just all of a sudden doing just great. Pretty much everything hit our targets. Uniswap hit our target perfectly. We're at resistance right now. Could we continue to the upside? For sure. This one is overperforming most as it's well above its 200 simple moving average. Basic attention token finally hit its 200 simple. If it breaks through this level, it could easily just go parabolic up to $1. Another 25% or something like that. I would not be surprised. Of course, I'm taking profits along the way. Dougie Dogecoin finally actually doing something. Broke above our 30-cent mark, up here at 34 cents now. Next target, honestly, I think probably 38 cents, maybe 42 cents. I mean, when this thing moves, it moves. When I move, you move, just like that. Does Doge finally make it to $1? Probably not, but maybe. I don't know. Is anybody sketched out by the fact that out of the top 10 cryptos that let's look at our top cryptos off the top of my head right now, the top 10. I'm not going to name all of them, but just a couple to pay attention to. Bitcoin obviously makes sense that it's the top crypto. Makes sense. Ethereum, smart contracts, has thousands of other cryptos built on top of it. Makes sense that it's in the top 5 or 10 for sure, obviously. Cardano, it's got smart contracts coming and literally does nothing. And it's number 3. But smart contracts coming one day. But Ethereum already has smart contracts. But Cardano's, they're on the way. So that makes sense. It's in the top 3 because smart contracts. And then what's next off the top of my head? What is it? Tether. I think Tether is the 4th biggest crypto. So stablecoin is the top crypto by market cap. I think, what is it? USDC, I think, is up there too. It's like in the top 5 or 10. So that's good. Dogecoin is up there in the top 5 or 10. So we have 1 useful crypto, Bitcoin. We have 2 useful cryptos, if you include Ethereum. And then we have Cardano, which is vaporware. We have Dogecoin, which is a meme crypto. So let's call it trash. And then we have two stable coins. And and Polkadot's up there too, which, don't get me wrong, I'm still long Polkadot, but I think Polkadot has like a 100% like inflationary rate or something like that. It's like 90% or something like that. So it's like everybody's like, oh, we're buying these to fight inflation. But Polkadot makes 100% per year. So if the USD was like, if they printed 100% of dollars every year, like, I'm sure people would probably be sketched out by it. But because it's Polkadot, it's not bad. Because you can just stake it and make back the 100% that you lost if you didn't. Sure. Speaking of Polkadot, finally got up above its 200 exponential. Still has not made it to 200 simple. Complete underperformer here. Does it shoot up to $27 all of a sudden? Yeah, probably. Chainlink finally got up to the 200 simple. After that, next target probably $31. Then maybe $34, $35. It's getting up there. Matic, underperforming here, I would say. Could easily get up to like $1.60. After that, maybe it gets up to, there's a bunch of overhead resistance here. XRP, it's going parabolic to the moon, but still not a new all-time high. At resistance, next target, that's 786 up here, 1.58, $1.58. Maybe it breaks out and puts in a new cycle high. Maybe $2.20. And then maybe, just maybe, XRP will prove me wrong and it will literally put in a new cycle high since its previous high of $3.27. Maybe. And then I will apologize to all the XR penises out there. And I'll be like, your cult is still a cult, but you did it. Put a new all-time high, guys. Way, way after everybody else did. And everybody else went exponentially parabolic. And you just finally got back to your old high. Oh, sorry, XRP. Solana just going absolutely nuts. Still going nuts. $40 was the previous high right here. Broke through that and just went absolutely parabolic. I would expect it to continue going parabolic, as why would anyone sell if there's no resistance above head? ADA coming back up here to that little high. Getting ready to retest that previous high back here. Looking pretty juicy. Maybe gets up to like 250. Yeah, good job, Charles. Pump it up. Because smart contracts, hooray! It's going to flip Ethereum, which already has smart contracts, and has had smart contracts for a long time, and has thousands and thousands of things built on top of it. But Cardano's better because Chucky. Bitcoin dominance, selling off violently, obviously. This is just looking exactly like the situation here. We get back up above, we get rejected, we come back down, put in a higher low. What was this? This was basically January of 2018. This was when, Bitcoin had already topped out and the alts kept running. So is that what's going on right now? Maybe. Total crypto cap back here, trying to put in a new all-time high. Shitcoins running wild. These shitcoins are crazy. We'll have to wait and see what happens. Probably just going to put in some massive divergence and get rejected. But who knows? Maybe all of a sudden, the crypto space is worth more than it was this time when it went into like an absolute parabolic bubble. When it had all this momentum on its side. but now all of a sudden it's even better, and more money is going to flow into it because now crypto's better, and there's new projects, and there's strong fundamentals, and good teams, and everyone has good hearts, and I trust them because Charles said so. Riot, we'll have to see. This thing's probably just going to gap up. Bitcoin keeps running. I would expect this to break through this level. Next target, 618, $47. Coinbase, it had a nice run. Sold off pretty heavy. Closed the gap right here. I think it continues to the upside if crypto keeps running. I still think our target up here like $300, possibly as high as 326. Robinhood, trying to close this gap. Basically already did. Meme stock. So what's it going to do? I don't know. Go on Reddit. MicroStrategy probably gaps up, completes this move, the 618, 850. If it takes out this high right here, it's going to start looking decent. I mean, I would never buy it ever, but it is what it is. GameStop, found support at our exact level. If it gets above the 821 right here, probably comes up and puts in a new lower high. Starts looking good for like another, I don't even know, maybe another 50% rally back up to like 240 or something like that. If this 821 crosses, but it's looking very weak overall. But right now, it looks like it's going to move up. AMC, apparently they're accepting Bitcoin for popcorn now, so that's good. Now you can buy your Bitcoin and movie tickets, or your popcorn and movie tickets with Bitcoin at AMC. So that, I'm sure, will keep it in business. Yeah, probably just headed back down to like $25 in the near future. Couldn't even get above the 8. It gapped up here because they're taking Bitcoin for popcorn. And then everybody's like, I'm not giving you my Bitcoin for popcorn. I'm not an idiot. I'm going to move it to the Citadel. And then it... Bed Bath & Beyond, just bleeding out. Bleeding out. Back down to 200 exponential and simple. Eventually back down to $23. Could easily bounce to 200 exponential and simple and put in a lower high. New Egg. Looks weak. Can't even get above the 8. Selling back off. Come back down here. Test this level enough times. And it is going to... New Egg's going to $10, folks. And this is an actual company. I have bought computer parts from Newegg and like it. But there's no reason that it's just all of a sudden worth, 8 times as much. Because Reddit said so. DraftKings, doing that thing where it breaks down below its moving average, comes back up above it, breaks back down, rejected, puts in a lower high, and then rolls over and bleeds out. Maybe not, though. Maybe it just go to new highs. So let's take a quick break here, and then we'll finish up with our commodities. So I will be back shortly. Going to get a little drink, stretch my legs, and then we'll finish off with our commodities. I will answer questions, jump in a chat if anybody's talking. Yep, give me just a minute, guys. And we're live. If you are just tuning in, I do want to remind you before we jump back into it, this is not financial advice. I'm not your financial advisor. Markets are extremely volatile. Please do your own research and trade responsibly. Hey, I see you guys woke up in the chat. That's what's up. I like that a lot more than silence. So Ray B says or asks, wondering how much you pay attention to volume. Volume on Coinbase has been very low from what I've been seeing on Bitcoin. Thanks. Yeah, I do pay attention to volume, Ray. I have a couple of, I watch like the actual volume that's built in to the chart, obviously. I try to look at multiple exchanges. So like I keep on my personal setup, I look at a Kraken chart, a Coinbase chart, a Bitstamp chart, and then usually just like one other random chart as well. So I can get a better idea as to what's taking place on all the exchanges. Because sometimes like there'll be a bunch of action on Coinbase but nowhere else, or vice versa. And that's usually how like big runs start, is on one single exchange. So I always pay attention to that. I do use the actual volume indicators, and as like price action moves up and volume goes like sideways to down, I consider that to be a valid divergence, the same way I look at any other divergence. So essentially I look for a breakout. Like if there's price action is moving up but volume is just trailing off, it tells me that it's an unsustainable trend and that all of a sudden we're probably going to see a big volume spike come in, and typically it's going to be opposite of the trend. I want to say contrary, but I can't think if that's the right word. It's going to be opposite to the trend. So all of a sudden we're going to get like a big volume spike of selling, and vice versa. When we were like selling off to the downside and then we're putting in all that bullish divergence and volume was just slowly dying off, and then all of a sudden we see like a decent little volume spike come in and we burst to the upside. Same thing. It's like a divergence, unsustainable trend. There's less and less selling taking place. We're going to lower and lower lows, and then finally no more lows and we burst back up and get a nice move. So I definitely pay attention to it. I do have, Ray, I recognize you. I think maybe not. I don't know. I don't know if you're new or not. I feel like I recognize you though. If you are not using any of the indicators I have, most of the indicators I use are available for free on TradingView. And if you go down to the like the description of the videos, it lists them all off, and you can just go on TradingView and find them. But like waddah attar explosion is my #1 volume indicator. Also, I like the VPCI, volume price confirmation indicator, as that will help you to tell what like smart money doing, institutional money, if there's more buying than selling. But waddah attar explosion is extremely easy to use and works phenomenally well. So while I don't always display it on the channel, I do always pay attention to it. So and again, that's free, so help yourself and highly recommend it. And Gabriel M says, haha, so true. I'm not sure what that was to, but if I said it, it was probably true. Spike, what's up, Spike? Keystone, howdy hi. Howdy hey. Thumbs up from Gabriel. Spike says, late to the party. Hey, better late than forgotten, my friend. It was starting to get pretty lonely in the chat before you guys started chatting it up. But yeah, glad to have everybody. Definitely seeing a couple new names down there. Glad to have you guys. Always appreciate the positivity, as always. Try to scare away all the newbies. Try to scare away all the moon boys by hurting their feelings and calling their girl ugly. That is one of the few cryptos with a working product being used worldwide on desktop and mobile apps. Should be top 5. Gabriel, I could not agree with you more. And while I don't really care about its position, I do understand and agree with you 100% in that basic attention token is absolutely phenomenal. I have been using Brave browser for literally years, and it is as good, if not better, than any other browser. It also does not steal your information. It doesn't sell it. And you can actually get paid in basic attention token as well. I am a strong believer in it. And, I've been saying for literally years that the main problem that crypto has, and why I still think this is like 2000 level like bubble action, is in order for something like crypto to actually succeed and take over the world and be implemented all over the place, it has to actually do something. It has to do it better than anything else does, and the transition from what was currently being done to the new system based on cryptocurrency has to like be seamless. So all you have to do is find a problem, fix the problem, and don't make it inconvenient for people, and you will succeed. And there are literally like, I can count on probably one hand the cryptos that do it. That's why I think Binance token is phenomenal. It serves an actual purpose, and there's limited supply of it. I think basic attention token is great. Obviously I like Bitcoin. There's but literally a handful of them. It's absolutely crazy that people don't understand. I'm like, look at it from a real, I look at cryptos as basically like startup businesses. Like, it's okay if in the beginning they don't make money, they don't like completely like fulfill their purpose, but they have to at least have like a white paper and then start like delivering on that white paper over time, or they're just going to be a failed business. So if you look at like all the like quote unquote cryptos with a good white paper, it's probably a long list of like great stuff. It's like, oh, we wrote this 1-page marketing statement about how great our idea is and what it's going to do. And then like how many of them actually ever deliver? Like 1%, 0.5%. So if there's 10,000 cryptos, how many are going to be like life changing and get adopted and be actually good over time and serve a purpose? Probably like 10. You know what I mean? Maybe 100. But 100 out of 10,000, you really want to try to pick the winners? And like the truth is, while I do like Bitcoin and obviously Ethereum and some of the other ones, the truth is like 10 years from now, probably the crypto that's going to be the best, the number one, the highest market cap, it probably doesn't even exist yet. So, I mean, we'll wait and see. But I think when people start realizing that like, if you can actually build something that serves a purpose, and like not just like a random purpose, like, but actually like achieve something better than our current system does, like probably that will be the one that succeeds, or the ones that succeed. I've said it for a long time too, as far as video games. Like, I used to play video games back in the day. One of my favorite games was Diablo 2. It was really fun, awesome. And like every time you would, I'm sure a lot of you guys probably have played it before, but every time you would like kill a monster, they would drop like items. And some of the items were like, say, a random sword, and it would have a chance of getting like a prefix and a suffix, or being like, an extremely rare item, etc. And it would generate that item at random, or it could be a preset like unique item, etc. And the better the item was, the more like collectible and valuable it was. Well, there would be like hacks where people would like dupe these items, and then it would eventually kill the value of the items. Well, if you have, basically NFTs, or use, cryptographics to make sure that no one can dupe these items, because you have like them basically stored on a blockchain, like that is a great purpose. And I think eventually that video games will like implement this system, and then it will prevent hacking or prevent like duping, and that will be how NFTs are actually valuable. But do I think like an actual like NFT of like Michael Jordan that you can literally just get that exact picture or GIF off the internet or whatever is going to ever be valuable? I mean, it is now, obviously, so maybe I'm wrong, but over time, I think things that are garbage eventually go to garbage valuations. But, that's what bubbles look like, is when a bunch of trash looks like it's worth a bunch of money. Like, I can't even remember what I was watching, something not too long ago, and someone literally, some artist in like, oh man, I wish I could remember where I saw it. Some artist in like Italy or something like that sold like an invisible portrait. And you're like, what's an invisible portrait? And he's like, literally like put up an exhibit, and there's like a display, and then like placed his invisible like piece of art on the display, and someone paid like $10,000 for it or something. So someone literally bought nothing for $10,000. Yeah, it's a bubble. People are stupid as fuck. Anyway, let me jump through these comments and then we'll finish up here. I called that one at $9, but never thought it would pump as far as it did. I'm not sure which one you're talking about, homie. Oh, AXS? Yeah, I don't know. When moon on Dogecoin? I mean, we're at the moon, aren't we? Yeah, that's funny. Yeah, I feel like Dogecoin is at the moon. Like, I remember when it was like 0.2 of a penny or something like that. Like, it's at the moon, in my opinion. Oh, hell yeah, Spike. I did not realize that you, I feel like I recognize all your guys' names, but it's tough to keep track. Yep, I've been paying attention to your channel for a while now. Hell yeah, Ray. General thought on Hex, mid to long term. You know, Richard Hart has a bad reputation and people talk trash about him or whatever. But when he was developing Hex, you know, I watched a lot of what he was putting together and a lot of his like interviews or like live streams or whatever. And, you know, while you could argue that Richard Hart is far from a likable guy, he's been in the space for a long time and I don't think he's a scammer. He specifically said what he was out to do with Hex. He had it audited. While people don't like the way that he handled it because he got rich off of it, sure, he built something that's functional and did exponentially well in this bull run and got rich off of it. Like, why is that bad? And he like donates a bunch of money to like charity and like what is it, anthropology? I yeah, I think he's probably better than half the crypto people who are like scamming pieces of shit. As far as like Hex long term, I mean, I don't see why it wouldn't just keep going up in value. I mean, the actual like idea behind it makes perfect sense. Like, get people to put money in something, get them to not sell it. You know, offer interest, have more buyers than sellers. It appreciates in time. It makes sense to me. It really does. It really does. And like as far as Richard Hart, man, you can hate on him as much as you want. Like he pretty much called the bottom of the 20, what was it, 18, like bear market. Pretty much called the top of the 2017 bull market. Pretty much called the top of this previous bull market, whether you argue if it's over or not. I mean, the guy fucking knows what he's talking about, and he's been in crypto and in the space for a long time, and he calls shit how he sees it. And again, while I say like he might not be the most likable person in existence, and you know I can understand why he rubs people the wrong way, but I think he's honest, and fuck it, he built something that works, and he deserves to get rich off of it, and he donates money to like charities and shit. So as far as I'm concerned, Richard Hart's all right, man. But that's my opinion. I mean, I can understand why somebody would not like him or want to invest in his stuff, but thumbs up, thumbs up, thumbs up, 100%. Triple hundos. Spike says, Hart is kind of abrasive, but the dude is smart. I totally agree, dude. Took a small position at 5 cents and seems like Hex just likes to go up. Yeah, I mean, if you look at the idea behind it and how it's designed, I mean, he nailed it. Get there to be a reason for people to buy into something and then not want to sell it, and then reward them for not selling it. And the best way to reward somebody is to reward them even more if they lock it up for like 10 years. I mean, at some point in time, he basically came out and said, look, I've created a digital savings bond, like treasuries, but like crypto. I mean, that, you know, it's genius, honestly. Oh shit, I just scanned through a bunch of them. Joking about Doge? No, I know you were, bro. I was totally joking too. It's definitely at the moon though. Gabriel said Axie Infinity is AXS NFT game. Oh yeah, okay, yeah. It's been blowing up, I think too, right? NFTs on what level they get to. Yeah, it's definitely been blowing up. That's the one where people are making money to play the game, right? I mean, not like in a normal country. Like I think you make like $20 a day. It's not like sustainable for like a job. But if you live in some like third world country or something like that, where they live off of like $1 or $2 or $5 or $10 a day, you can make a legit living doing that, and then just selling your NFTs or whatever to other people in, you know, expensive countries. Yeah, I definitely have heard of it. Awesome. I'm glad I'm not the only one who thinks like that about Hart. Yeah, I mean, again, I can understand exactly what you said. He's abrasive. He rubs people the wrong way, but the guy's fucking smart, and he's not a scammer. So he's got one up on most people in crypto because they're either not smart or not, or they are a scammer. So him being smart and not a scammer, in my opinion, is 2 thumbs up. Agree with you on Richard Hart. Smart dude. Now he's launching Pulse Coin. Yeah. Pulse is the one where if you donate to the charity, you get a bunch of Pulse, I believe. Again, so got to give him props on that. You know, and when you think about like what he's talking about doing, He's like, look, how do you get people to invest in, a charity? Reward them for doing so. Yeah, and he calls out scammers. Yeah, honestly, man, shit, I might have convinced myself with your guys' help. I think I like him even more now. But again, most people are scumbags in the space, just trying to make like a buck or get rich or whatever, and then dip. Like for him, he actually built something functional and got rich and is not a shady piece of shit. So as far as I'm concerned, fuck yeah, Richard Hart. Get him. So let's go on to our commodities. Gold, ZAO is next, XAU. Again, this is that signature that we're paying attention to. We break down below the 200 exponential and simple, come back up, get back above the 200 simple, and then break down from it, get rejected at a lower high after that. And then we have to see, do we just continue to sell off? Yes, probably. People are saying that this is bullish right here because we have a hammer on the weekly. Is it possible that we have a hammer on the weekly and we just go up from here? For sure. This is definitely a bullish candle in my opinion. We got one right here and it got bought up aggressively and then we continued back to the upside to a lower high. So while it could be bullish short term, I don't think that this is just like, oh, that's the bottom now. We're going to new all-time highs. The fact that the wick even got down this low tells you that, there was basically stops getting run down to here. And in all reality, until we're back above the 8 and 21 on the weekly, I mean, this looks shitty to me. And how hard is it going to be for a weekly bearish engulfing candle? I mean, literally, if this week gold sells off $16, we have a bearish engulfing candle. So what's more important, a hammer or a bearish engulfing candle after the hammer? It's subjective. But the fact of the matter is, red slope, clear downtrend, below zero line, hard sell, Stokes are all angled to the downside, 8 and 21 are crossed to the downside. As far as I'm concerned, the gold chart looks slightly better, but still bearish. I think that was honestly a reaction rally, and it just bleeds out. Silver has lost the 200 exponential, lost the 200 simple. 8 and 21 are both angled to the downside. Silver looks terrible. It was stronger than gold like for a long time, and now it's weaker than gold. And we have finally crossed the 8 and 21 to the downside on the weekly chart, and we're inside the bearish control zone, and we have only red histograms, and we have a red slope line. And this is a much less bullish candle. It closed bearish for the week, and it has a much shorter wick in comparison to the body. So typically what you want to see is, you want to see it either closer to this, where it has like a sliver of a body, or it's green is preferable, with a big long wick on it. This one is still decent, but not great. So again, I mean, I just don't see precious metals all of a sudden looking great like everybody else is. I think it's just that same, talk to a precious metal guy and he'll give you 100 reasons why precious metals are good while they go down for 10 years. So it is what it is. Don't join a cult. Just in general. This is not financial advice, but I will give you advice on joining a cult. Probably not a good idea. Probably not a good idea, no matter what cult it is. So gold silver chart. I mean, we entered into a downtrend on silver, or I'm sorry, on gold in relation to silver, and now we're back in the uptrend. On our weekly, we have all green histograms. We have a blue slope line. We're inside the bullish control zone. The Stokes are still angled to the upside. Our next target is 78 to 1. Does this mean that gold has to go up and silver goes up slower, or gold has to go down and silver goes down slower, or gold goes sideways and silver sells off, or gold goes up and silver goes sideways? Yep, any one of those things could happen. But the fact of the matter is, this is doing exactly what we said was going to happen, and it's doing it right on time. So I still expect this to get up to like 83 silvers to 1 gold, 87 silvers to 1 gold, or potentially as high as the 90s silvers to 1 gold. But after a while, I eventually expect it to do something like this and massively sell off, and I expect it to even out down here at like 40 silvers to 1 gold. Let's fucking go. And that's when you cash in those silvers and you buy those golds. But right now, you want to be in gold, in my opinion, over silver. But why not both? I use it more as like a which one am I going to buy right now? If gold looks better than silver in an uptrend that could last for months or years, and I'm going to invest in gold or silver regardless, I would rather buy the one that is going up. But long term, I think silver is probably the better buy. Honestly. Platinum, I think this was just a reflex rally. It still looks bearish to me. You know, we bounced the 382 literally perfectly from the bottom to the top. You know, it looks like shit though. Let's be real here. You know, we have rolled over. Oh, look, another one of those specific ones. We have rolled over underneath the 200 exponential and simple. 200 simple still has a positive slope. We broke down from the 200 exponential. We're going to come back up here soon and retest the 200 exponential, eventually the 200 simple, and then we'll probably get rejected at a lower high and continue on down. So maybe not though. If it's weak enough, maybe we don't even make it back up there. But again, you know, clear bullish divergence though between these 2 points. Is that what's playing out right now? Do we get a third drive and then it pushes back up? You know, anything could happen, but there's definitely some divergence showing up here. But platinum looks weak. It's been weak for a long time and it's still weak. When it starts showing strength, I think it outperforms probably most metals. But you know, I don't like buying the weakest asset, especially when we're talking about like 5 and 10 year trends. First Majestic finally broke below those lows. Not surprised. We were expecting it. Still looks like shit. It's going to continue looking like shit. Matter of fact, it looks even worse now because this was our key breakout level and potential for the 1, retest of the 1 at the 4 right here. And now we have broken down back inside of that pattern. I do not want to see this monthly close inside of that. If it does, it's going to look extremely bad. This is what I'm looking at right here. We could still save it. If First Majestic pumps back up to like $13.40, we still have a valid 5-wave structure. We're still outside of, you know, what amounts to this pattern from 2011. But if we break back down inside this, I think we revisit the bottom of the range and it starts looking very bad. I do not want to see that happen, but you know, it is what it is. Silver Juniors looking terrible, broke down from key levels, putting in new lows. I expect them to continue putting in new lows. You could argue there's a little bullish divergence, but I mean, there's not enough stuff telling me I want to be in miners. I know everybody's talking about how undervalued miners are. They are definitely undervalued right now in comparison to a lot of other things. They are definitely undervalued because they're going down and everything else is going up. So are you catching a falling knife? Are you dollar cost averaging into a downtrend? Sure, go ahead, by all means. But if they're constantly making lower lows and look absolutely horrendous while everything else is crushing it, I don't expect people to just pile on into them and say, oh, it's their turn now. Like, how do you pick the bottom? USAS, key level right here. This 236, if it doesn't hold, it's going to look fucking terrible. Terrible. But again, triple bullish divergence. I think it bottoms out here and gets a nice move up. I mean, this thing could actually, we could see a pop on this thing for like 40%. But again, I'm waiting for the popcorn. Popping popcorn. Tilray, pot stocks are the same thing as the miners. You know, they're complete underperformers. Back underneath the 200 exponential, 200 simple, selling off. Still out of these things. You know, I mean, I always have some positions in them, but it's literally just profits that I never got rid of. You know, I have no interest in trying to pick the bottom on these. ACB looks like it's getting ready to break down from that level. I think $5 soon. CGC, Canopy Growth, again, looks absolutely horrendous, terrible. You know, does it get back down to like $13? I don't know. Probably. Again, lost to 200 exponential and simple moving averages. Pot stocks look horrible. Uranium, doing exactly what we said. Could not get back above the 821 and convert them back, cross them back to the upside. I expect a test of the 200 exponential and simple, $18. After that, you know, another little dead cat bounce, continue going sideways, and then eventually a sell off. I really think this thing's going to get back down to like $14. UEC, same thing. Targets are still in play for $1.76 and $1.50. Could it go lower? Yes. Could it find support sooner? Yes. We are now officially below 200 exponential and simple. 200 exponential has flipped over red. 200 simple is still hanging on by a thread. And it rhymes. CCJ, Cameco, same thing. Just getting ready to just bleed out, it looks like to me. You know, we're a better part of the measure move down here. I expect 1279, maybe 1079. Again, I like all these stocks. I like all these things. That's why I look at them, but I do not like them now. So you could say that if you liked it at $20, I love it at 10. Sure, but what if it goes to 5? You still going to love it then? Yeah, I'll wait. URNM, North Shore Global Uranium Mining ETF. Hey, what a long name. Same thing, flattening out, 200 exponential and simple, looks slightly better than the rest. But I mean, what do we do? Let's just pull this out a little bit. Oh, actually, I think this is an old chart about a potential high. Basically bounced at the 236. I mean, 382 looks good. 48.72 after that, 0.5, 43 bucks. I mean, again, you want to pick bottoms on this thing after this run that I already had up. I'll just wait. Made my money, stepping off to the side. I'll wait to get back in when everybody else thinks it's ugly again. I'll think it's pretty. Copper CPER Index Fund. Topped out basically at the 1.618. Looked nice. Everybody else was still bullish. Copper, we need it because stuff and infrastructure and metal and electric cars. And sure, we just broke out of a key channel. We tried to retest it. We failed. We're coming back down here. I think we keep coming down. 24.60. Eventually, I think copper goes absolutely parabolic. Does it go to $20 before then? Probably. And I mean CPER, not like an LB of copper. The old poundy pound. Pound it. LIT still cruising up here. We almost made it to our target, just shy of the 1.5. 1.618 is my main target. $90.78. Make it a 90. Might as well just go to 100. And if we make it to 100, why not 110? So I don't know. Maybe this gets up here. $98. Maybe 123. I don't know. Probably not going to get greedy though. I'm going to keep moving my stop up on this and taking profits along the way because shit. Most commodities are getting wrecked right now. Oh, look. HYDR, hydrogen ETF, did exactly what we said and took out the low. So new all-time low, breaking down from the range. I expect it to continue breaking down. We can start looking at some of our targets to the downside. Obviously 1.236, 22, 1.382, 2172. 1.5, 2150, 1.618, 2126. But it's been so range bound at this point in time. If it just like dumped down to like $10, I wouldn't even be surprised. I mean, it's been range bound between $22 and $24. So it's a 10% range that it's just been literally chopping inside of. So again, I'm not looking to just jump straight into this, but when it gets down to nice levels, I do plan on buying. Lumber futures, again, tried to bottom out here at a key level and now it's getting rejected. So does it come down here to 786? I mean, look, I know it sounds crazy, but $300 and something lumber. Are we getting $378 lobster futures? Probably. Triple bullish divergence. Triple bullish divergence could invalidate it if it keeps selling off here. I think it's gonna be tough for lumber to recuperate though. Because you got to think, there's just a shitload of wood sitting around all over the place that all these lumber yards overpaid for. And people aren't just swooping it up for overpriced value. So, it's like a dead market right now. People are going to slowly buy stuff as they need it. But, basically all these lumber yards have to just take a loss, get rid of all this, and then just start getting the cheap stuff back in to keep moving it. And there's no guarantee then that people are even going to buy it. Catch the knife. Catch the old fallen knife. And if you catch it wrong, it's going to stab you in the hand. Or somewhere worse, like your junk. Or your toe. Caterpillar, looks decent. Got that little bounce off 200 exponential and simple. But I expect to just... we got the measure move down. I'm not greedy, but I don't think it's done. This infrastructure, hooray! Bulldozers and stuff. Yay! Probably just going to keep bleeding out. Deer looks a little bit better, but still doesn't look great to me. It's back up here at those highs again. This is that infrastructure pump. We're going to build stuff. And then you realize, even if the government was going to use any of this money to actually build stuff, it would be in 5 years. So this is just, we're going to price it all in. And then it'll just sell off after that, in my opinion. AM, Antero Midstream Corp, about clean water and stuff. No lead pipes. Yeah, probably just retest the 200 exponential and simple here. We'll see if it holds support at 850. Look, we look at these charts all the time and nothing happens. Probably just going to keep doing nothing to the downside. Cemex, same thing. Broke down from a key level. Basically just going sideways. Maybe it pops to the upside here. Probably just bleeds out. I think realistically $7, $5, whatever. I have literally just profits left over in some of these, but main positions done. CLF, steel. Don't miss us, steal your steel. I mean, looks good. Making highs, not all-time highs, but cycle highs. Reclaimed that key area here, pushed back up, and took out that previous all-time high, which happens a lot of times right before a massive sell-off. But in all reality, it's got some other key levels along the way. It could easily get up to $29. Another 10% to the upside. After that, maybe 35. Maybe gets up to our main level up here, $45. Sure, maybe. Sure. Probably not, though. Let's be real. Probably not. Ford. This thing's looking like it's about to get found on the road dead, if you know what I'm saying. Yeah, I mean, same thing. Just a rejection off a key level. Breaking out of a key area. Looking like it's just getting ready. I mean, I wouldn't be surprised to see this thing lose 30 to 50% of its value in the near future. Fundamentals are terrible. Technicals don't look good either. Had a nice run. Rolling over, though. GM, same thing. Fundamentals and technicals both pointing to the downside. Looks weak. Hanging on 200 exponential and simple. I expect $45. After that, $36 or somewhere in between is the measure move. Looks bad. Hasbro, looks like it's carving out a little bottom right here. Again, I really wanted to see it. I really wanted to see this hold, this breakout area right here as like a hard support. I do not like to see it break back in, but it looks like it wants to go. It looks like it wants to go. But again, this was a total F up on my part, honestly, because I was looking at this thing already as a buy, and then it like gapped up on me, and I'm just not going to chase it. So, not going to chase it. Works. Oh, yeah, this was one of the ones we were talking about that just, it's showing some potential here. But again, I mean, you're like taking a stab at the bottom on this thing. I mean, this is just ridiculous. This was at over $100, and now it's at $2. Like, I like that we're back above the 200 exponential and simple on the daily, and they're sloped back up for the first time. I would much rather get an entry off of them at like $2 even. It had a crazy bounce off that and then put in another high afterwards. Really got to see what happens when it comes down here. But there's going to be some kind of setup like this, like some kind of 10-to-1, like phenomenal setup. But I just have to get the entry perfect on something like this, because you don't want to just get wrecked on a stop loss or it just continue selling off. But this thing probably has bottomed. We'll see, though. We'll see. This is another one. Any sphere, same type of thing. This thing has been getting absolutely crushed, and now it looks like it's trying to carve out a bottom here. If one of these areas holds, there's definitely some potential for it, but it already had like a nice push up here. And when we zoom out and look at this chart, I mean, this is just utter domination. $2,221, and it's at $4. I'm really not even interested in something like this. This was a request, by the way. These last two were, but it looks like it wants to bottom, honestly. And even if it bottoms and runs up to like $85 from $4, I mean, that's like a 20x. Yeah, I mean, look, it's starting to look decent, honestly, and it really could get up to $80. We'll see. We'll keep an eye on this one. I'm not ready to just jump straight in. I'd rather buy into the momentum on this, and it is starting to show some momentum. So I will keep you guys posted. I will continue to look at this one until something changes one way or the other, and then maybe I'll still look at it. And then last but not least for today, we got that WTW, know what I'm saying? That Weight Watchers, them thickies, them brownies. Oh, wait, no, that's not right. To stay away from the brownies. You know what? I mean, fundamentally, Weight Watchers will probably kill it in the future, because I think they said like the average person gained like 40 pounds during lockdowns. So yeah, Weight Watchers probably like never looked so good fundamentally, like based on just everybody's much fatter now. But I don't know. Maybe people just want to stay fat, and also technically it looks like shit. So I don't know. That's a big gap down. There's a key like little support trend line here on longer time frames, and it looks like it wants to break. So, and that's also a big, thick, juicy red candle. I mean, I can keep looking at this one, but as far as I'm concerned, we'll have to wait and see how the monthly ends. If it starts getting bought up a little bit above those levels, it could look okay. But right, I mean, that weekly is big and thick and red and scary. I mean, so yeah, maybe it bounces here. Maybe it just bounces more to the downside. Uh, I don't know, man. I don't know, Weight Watchers. Whatever you're doing, do the opposite. Yeah, I don't know. Maybe people just like, just want to be fat. Maybe they're just much happier at extremely higher valuations based on weight. I mean, I don't know. I don't know. It just, man, I gotta just say, Weight Watchers just looks like it's gonna just keep taking a big dump. But we'll see. We'll see. So yeah, that's it for today. Hope everybody enjoyed the stream. Appreciate you guys tuning in. All the likes, all the comments. Love chatting with you guys. I'm going to be starting one day. I know I probably have said this before, 100% definitely, but I'm going to start putting out static videos again, because while I do appreciate everybody being here, I have noticed that I basically never pick up new subscribers now. So I can understand how people wouldn't just want to tune in and have me like make fun of like the assets that they love and tell them how they're going to go down or whatever. I mean, honestly, I should just do like one stream a week or one video a week where I just like pretend like I'm super bullish on everything just to pick up subs, and then I trick them into like listening to actual technical analysis. But I don't know. It's not really there for me. I really don't need subs. It would be nice to actually grow a little bit. But yeah, that's it for today, guys. Are you trying to give me financial fried rice about joining a cult that doesn't join cults? I mean, Spike, technically, I did advise you not to join a cult. So I kind of invited you into the cult of not cults, the anti-culter. I'm an anti-cult cultist. You know what I'm saying? I joined the no cult club, the club of no cults. We'll come up with a cool name for it. But you're definitely in. So yeah, that's it for today, guys. Appreciate everybody tuning in. That is our Sunday evening market look ahead. It is 10:22 on August 15th, 2021. I am Crypto Trend Trader. And remember, this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. And with that being said, I'm out of here. Change your username. It's so true, dude. I should just change my channel's name to Moonboy All Moon Everything or something like that. And then I'll just like put out nonstop videos about how everything's just going up and just like, let's go. I'll just yell, let's go. Let's go. New all-time highs. Moon boys. Your $9 is going to be $1 million in 3 years. All you got to do is hodl. It's so true, dude. So true. But again, it's not like I don't know that all I have to do is just lie to everyone and tell them how good all these cryptos and all these stonks are and how these valuations are great and that you should just go all in on them and lever up. But yeah, just not really interested in that. But I mean, I would still like to grow. I just want like a balance where I can tell the truth 99% of the time, but then also gain one sub. Also gain one. Not asking for much. But yeah, that's it, guys. I'm about to check out for the evening. Appreciate you guys. Good to see you, Ray, Spike, Gabriel, and all the others that I'm not going to scan up and see. But definitely good to see everybody in here. And I will catch you on Wednesday for our live stream at 8 p.m. Eastern Standard Time. You too, brother. Good to see you. And as always, appreciate the positivity. Love you guys. Take care of yourselves. Take care of your families. And make that money, honey. Yeah.